Commodities enter September with diverging signals. Oil and natural gas to downward for the mid and long term. Uranium takes a breather but keeps its long-term bullish outlook intact. Precious metals, too sensitive for open discussion. Those insights remain in our private written reports. Coffee and corn keep brewing rallies, wheat struggles to bottom, and lithium sets the stage for an impressive breakout. Let's walk through the charts. And today we start with oil. What we are seeing here is predominantly bullish picture on the short term. On the daily frame, we can see a nice harami, bullish harami, and also on the weekly frame, we have a bullish harami. So the chances that oil has an uptick early next week are fairly strong. And if we look at the 3-day frame, there is a possibility of a ladder bottom here. So I would say that oil is slightly bullish going into next week. However, if we look at the bigger frame, like say 10-day frame, which closed last week, the closure here was bearish, and we are looking for a continued move lower, especially if we look at the bigger frames that we discuss in our written reports. If we look at the Elliott waves, the chart that we shared at the beginning of July remains unchanged, and we are looking for oil to continue down. However, we might see a little move here, something like this for an alternative 2, and only after that oil will go down. Potentially oil might form a bearish flag here, something like this. And however, considering a very strong pressure from the long-term frames, I would not reject the possibility of an immediate move lower. So to complete wave 3, if oil is happy, well, let's say lucky enough to find support in the red rectangle, then we might be looking for a very large and prolonged flat and ABC formation over the next year. Well, that's the perspective for oil. Now let's have a look at natural gas. So if we look at the candles, unfortunately the closure is strongly bearish here, and that's why. So on the 5-day frame and the weekly frame that closed on Friday, we can see strong bearish engulfing, and the doji here on the daily frame is most likely a consolidating one. So at least for a bullish reversal, we need to see a very strong reversal here. And the 15-day frame, which is closing next week also, so far is on track for a bearish formation, supported by multiple technical indicators. If we look at the Elliott waves, they are not very convincing, and the biggest concern here is that the big gap that the wave started off the bottom with, and now at this point I am tracking 2 potential count, either the purple one for a bigger impulse here, or a corrective action here, which could potentially complete as an ending diagonal for wave C of 2 going lower. At this point, we cannot rely much on the Elliott waves because of this uncertainty over the gap, and we are looking mostly on the candles and technical indicators, which, by the way, are pointing downward at this moment. So natural gas is expected to be bearish next week. Now let's have a look at another energy element, and this is uranium. We will talk as usual about 2 instruments. One is URA, a global uranium ETF, and at this moment the daily closure was slightly bearish. However, it requires a confirmation. So far, it is sitting comfortably on the support line, 8 days EMA, and a very strong move indeed is required for flipping this combo. On the weekly frame, last week we discussed this level 41.57. Uranium indeed closed about this level, and now we are looking at a slightly bullish picture. I would like to see a closure above this line, about this high, in order to continue the rally. But nevertheless, so far, the odds for the next week are slightly bullish. And if the momentum holds for the remainder of the months, we would be looking for a bullish continuation on the monthly frame. So potentially this would be the everything that we had for a corrective action. So I'm looking for possible wave 2 here. So it might get extended. However, we are still don't have enough certainty from that. If we look at the chart, this is the one that we shared on May 10th. Since then, uranium ETF added 55% and is sitting comfortably with exploring higher highs. The question is whether this wave 2 that I'm looking for is getting extended. And if we look at the smaller frame, like 4-hour frame, there is still uncertainty here. So I think that the monthly closure would be the key for this crossroads. Either it's going to be a wave 1 completed here and wave 2 starting for a bigger correction, targeting this area, or wave 2 has been complete already, and now we are looking for wave 3 to continue. Again, so far, the weekly frames are looking bullish, but the monthly, we still need to see whether momentum holds and we get a strong monthly confirmation of a continued rally. Now let's have a look at Quad U Energy Fuels, and this picture is practically bearish, I would say that, and there are several signals here. On the daily frame, we have a confirmation of a top and a strong break below the support line, 8 days EMA. On the 3-day frame, we have a fairly significant dark cloud cover, and on the weekly frame, unfortunately, this could be a reversal candle, and we might see some softness in the next couple of weeks. However, from technical perspective, it remains bullish so far, and we need to see a clean reversal. Whether this 1-day and 3-day frames develop into something bigger and we see a reversal on the weekly, it still remains to be seen. And if we look at the 4-hour frame, I think that Energy Fuels potentially completed a wave, an impulsive wave of the top, and wave 1, the bigger one, and now it would be looking for completing wave 2. So wave 2 can be very sharp, and but also can get extended. I would be looking for something like this, for example, before the rally will resume. Perhaps we could be looking for a consolidation over the remainder of September and October. But make no mistake, the long-term perspective remains bullish. And at the beginning of August, I posted a long-term forecast for the Energy Fuels in our written report at investingangles.com. Now let's have a look at agriculture, and we will start with coffee. So coffee is bullish. It closed bullish on the daily frame with very supporting technicals, it formed a continuation candle on the weekly, and by the way, it's already added 30% since our call on the bullish engulfing here at the beginning of August. And the 15-day frame is also looking bullish with a bullish continuation candle. This is the chart that we discussed last week. So far, this is on at the micro level. We are looking for a continued move upward. Potentially, this leg could be another 30%. And the long-term chart, this is the one that we had a discussion at the beginning of summer in June, saying that this wave 4 is completing here, and we would be looking for a 60% rally or so. So far, this is coffee is trailing well, and it is forming an impulsive wave upward. The question is where it ends. So far, the targets remain the same, 450 to 550 roughly, with a midpoint about 500. That's the targets which remain unchanged. Now let's talk about corn. Corn is also bullish, at least mid and short term. The daily frame completed a solid consolidation and made a breakout of the 100 days moving average. The weekly frame is also bullish, very strong bullish cross here, 50 over 100, and the bigger frame are also looking bullish. This is the perspective chart that I shared last time. I would be looking for at least this type of rally towards 500 or maybe even bigger. And if we look at the Elliott Wave, this is this short-term frame for 4 hour. So far, it looks like corn is forming an impulsive wave. So possibly it's wave 3 could be here or here. That's still the question. Because of this gap, we don't have that much information, and we have to rely on our hypothesis. So far, that's the perspective for corn. And this is the longer term picture. This is also remains unchanged. We are looking for a potential rally towards this area. So this may be 640, 760. But this is like a long-term target. As I said, the short term is around 500. So this is the perspective. Now let's talk about wheat. Wheat is unfortunately not as strong as the other two. On the daily frame, it formed a bottom. It technically confirmed a reversal here. However, on the larger frames like the weekly, it's only a thrusting line, and this candle is technically a continuation, bearish continuation candle. Has much better odds for moving lower, and the next week would be crucial. If wheat closes above the high of this candle next week, this would be a bigger bottom, and we would be looking for a move higher. If it closes below, well, then we would be looking for further decline. And in such conditions, the monthly candle becomes very crucial here. So at this point, it is looking like a bearish continuation. However, we still have 2 weeks to go, and it can change drastically if there is a rally. Well, so we are monitoring it and looking for a potential bottom here. If we look at the Elliott waves, this is the chart that we've been tracking since August 2022. So far, wheat remains in the target area around 530, the price that we identified 3 years ago. And if we look at the smaller frame, there is a possibility of an ending diagonal. Whether one more low is required or not, it's difficult to say. However, I would be looking for one more lower low before starting a big move upward, and the move upward would be quite significant in such technical conditions. Well, that's all for wheat, and now let's move on to lithium. Let's see what we are seeing here. So it was a very strong bearish ending of last week. However, lithium managed to recover and reset the technicals, and now we are having a freshly made 100 over 200 days moving average golden cross. So perhaps we are looking for a significant rally. If so, this the weekly candle is only an incomplete dark cloud cover, which has a chance to become bearish, but at this point I'm looking at it as a continuation, as a bullish continuation candle. The monthly frame looks healthy, and if the momentum holds for another 2 weeks, the 3 months closure would be just impressively bullish. And considering this we are tracking this chart for a while, and the next target that I'm looking is 55, 56 area. However, it could be much higher. I think that once we have a monthly closure, I'm going to discuss the long and midterm perspective for lithium. Well, that's all for commodities, and before wrapping, I like to have a quick update from our swing room. On September 10th, we were long SPY. We continued to stay long. Over the past 12 months, S&P 500 itself delivered a 17% gain, but our swing room trading unleveraged scored 41. Discipline and timing continue to make the difference. And now let's wrap up. This week's commodities story is one of contrasts. Oil and gas continue to grind lower mid and long term. Uranium pauses, but the big picture remained bullish. Coffee and corn fuel rallies, wheat keeps building its base. Lithium flashes bullish setups, preparing for a potentially powerful rally. Gold and silver, we keep those insights exclusive to our written weekly reports, where you'll also find long-term charts, Elliott waves, and rare candlestick combos. New members can start with a 7-day free trial, full access to all written reports, and daily trade signals. Share your thoughts, engage with the charts, and spread the word across your trading circles. At Investing Angles, we chart the charts before the crowd even blinks. Thank you for watching.